Jeremy, yesterday at the Financial Brand Forum here in Vegas, you covered a ton of ground as you shared about your perspective on the future of fintech and in banking in general, but you also talked about the opportunities, the challenges, some of the trends that are impacting the overall industry, and you're also doing it from the perspective of a leader of a fintech firm that has its foundation in Africa, in Ghana. And it's interesting because I mentioned to you that I was fortunate enough before COVID to visit different parts of Africa, which, like the United States, you go to different parts, they're vastly different. South Africa and Northern Africa, where you're from, it's vastly different than each other. But Africa is a country, and how they embrace financial services is also different. So can you explain from your perspective, knowing how the rest of the world kind of works, what is different about Africa with regard to financial services and then also as fintech?
Yeah, so I think it's a brilliant question, right? And I'm actually happy that you've actually experienced the continent. So initially, I would have said that Africa started off by trying to take what was happening in the West and basically photocopying it for the population. But as time goes by, you begin to recognize that the consumer is totally different, right? If you look at the statistics, right? Globally, there's about 1.7 billion people that are still unbanked, don't even have access to a bank account. If you bring that to Africa, 45% of the continent, the adult population, does not have a bank account, right? And it's not as if having a bank account is revolutionary in itself, but once a person has a bank account, they have the advantages that come with it, even the dignity, right? Because people do worry about things like, how do I afford education? How do I handle emergencies when they pop up? So providing access to financial services does do a lot for the consumer. So you first have to understand that this person that you're serving is very different, and their problems are uniquely different. So the banking system has had to adjust to that. So the reason why we employ what it's called a phygital model is you have a physical presence because there are still people that need to be handheld. These are consumers who have never engaged with financial services, because if I'm going to go to a bank to ask for a loan and they're going to ask me to come with 16 different documents, I don't have these things and I can't even read those documents. Right. I don't have the kind of collateral you're asking about. My best experience of an investment is a goat or a cow. That's how I keep money, and that's what makes me money. So you have to now think through and say, how do I bring this customer on board? What are they using? And that's why the proliferation of things like mobile money has become such a driver in financial inclusion. So banking in Africa is tailored to the needs of this unique customer. And that's how it's different from the rest of the world. And I assume that in other parts of the world, it has to be tailored as well. But the African consumer has needs that require you to be creative in your delivery of financial services.
Well, it was interesting because, as I discussed with you, one of the first impacts that I had was the fact that, as you mentioned, payments really is the foundation of all the banking in Africa, as it is in South America, as I've recognized. And that it wasn't just access to it, but many people didn't trust the banking system because it was considered to be tied to the government. If you can avoid the banks, you can avoid paying taxes, you can avoid a lot of things. And it was interesting because back a decade ago, many of my listeners probably have heard of at least M-Pesa. M-Pesa, I think from a lot of the Western organizations thought it's just too simple. It's just a flip phone and it's a payment app that can be used everywhere. What is interesting is we thought, well, we have this more knowledge, we're much more advanced. And looking back, the advancement of technology now has made it so we're trying to get to be as simple and fast as M-Pesa with all the banking. Something that can be done on a flip phone, something that can be done on a tablet, something that can be done on a smartphone or by voice. And it gets down to conditioning the financial services to the audience you're trying to project it to, but there's still a need. And you mentioned about the unbanked population. Many of those people didn't want to be banked. Some of them couldn't be banked. But just as in China, the availability of little parts of data changed the way you address the consumer overall.
So what Jumo is a fintech, and fintech essentially is the application of technology to finance.
Yes.
But Jumo is unique in that we have a platform that is built on two main pillars. So on one aspect, we deliver end-to-end or next generation end-to-end technology that goes alternative to the high fixed cost models that is traditional banking.
Yep.
And then we also have a learning machine that is able to leverage alternative data, so a customer's digital footprint on their mobile phone, to be able to predict their risk and lower costs, so that it brings as much value to the customer and to the partner as possible, right? So as we said earlier on, this is a customer that doesn't have any financial history, right? And they can't fill 16-page documents. They can't afford
show a mortgage.
For example. Yes. But we're saying that no, well, you do have background on your mobile phone. You do have a digital footprint. And this tells us a lot more about you than you would have told us in your 16-page document. Plus, we're able to partner with banks and large payment providers, in our case, mobile network operators, to say, this is a segment of the population that you did not want to attempt to bank because they were risky, they were considered risky. We have found a way to be able to score them that is substantially more improved and advanced than what you currently do. If you give us a try, we will make sure that we are able to achieve your goals as well. And so far, we've been successful at doing that. And so Jumo's mission is simply to provide access to good financial choices for people who hitherto were unbanked or underbanked.
So you've done the research, really, that the traditional financial institutions really don't have access to, in many cases, because they wouldn't look at alternative data. It's interesting, as I've talked about many times, I was fortunate enough to go to Shenzhen, China in the early part of 2020 and visit WeBank. And their whole platform, their digital platform, has been built around the same thing you talked about, where they have millions and millions and millions of customers. It's the biggest digital bank in the world, but it came from the same foundation where they said, we can take mobile data and we can not find the best customers, but we can eliminate what will be the worst customers. And they know where the risk level gets to the point where the phone's gone places where the person isn't, or they haven't made payments the way they normally should, or they haven't made their phone payment in many cases. And all of a sudden they're using alternative data to reach out to billions of customers that they want to reach out to anyway. So do you see the future of fintech then being more of a standalone organization, or more like yours where you're actually partnering with traditional and even other fintechs, but other organizations? You see the collaboration model probably being the future of how this is going to roll down the path going forward?
I 100% believe so. I do not think the person who is going to win the game I don't think it's a zero-sum game. I think that even though people tend to predict and repeat the quote that there's going to be a world where there's banking and no banks, I don't think that the banks are not aware of this. And if you observe recent times, they're now beginning to recognize that they want to do banking, right? The technology aspect, to an extent, actually scares them, because every time you turn on the news, it's a different technology that is being predicted to disrupt your industry. But what you are good at is the credit underwriting, managing risk. And now you're being forced to do this whole technology aspect and go into blockchain and AI and all of that. Increasingly, the banks are beginning to recognize that let's focus on what we are good at, and let's bring these new players on the block who seem to be better able to understand this new customer and their needs. And they seem to be able to use technology in a way that is either at par or superior to what we do. So the partnerships brings value because, one, they don't have, most of the time, the balance sheets. They don't have, that one of the biggest challenges for fintechs is being able to scale, being able to achieve profitability. The banks are good at that. They've done that. So you bring those two together and they say, well, we have flexible platforms that are able to reduce the per unit cost, are able to understand what actually customers value. And what we need from your side is the strategy, the goal, the balance sheet, and we will be able to make something that brings value to all parties involved. So that collaboration is going to be what wins. It's going to be an ecosystem that grows and grows to include a lot more players within that financial services institution.
Because they really do need each other.
Exactly.